right? And that's why it's called the reserve, because they're there to pretty much break any fall that we have. Because we learned in the past, right, that these falls have left us crippled. We didn't know how to recover from them. So now we need an independent entity that understands money and understand how to keep it perpetual no matter what the calamity that takes place. We still know how to keep this money in the event of the rainy day. So that's what they are. And they have a power called monetary policy that allows them to do things to fluctuate inflation, fluctuate interest rates. So they do things to drop the interest rate because monetarily they're the most powerful entity we have in this country, right? When they wave a wand, people get hurt financially and some physically. People get hurt when they wave a wand. So they'll pump all this money into the economy, and then we get all high on, these low prices and this ability to get contracts, government contracts and loans. Oh, I remember one time everybody was running around with platinum credit cards at one time, because you get these instances throughout these institutions where they may have a trend where they are giving out money. Why? Because they have an excess of money. You see what I'm saying? So the reserve also requires these banks to keep a certain amount of money on reserve. You talk about that fiduciary duty, right? Why you think their fiduciary duty only covers you up to 100,000, right? It only covers you up to 100,000. It makes sense. If we have a $21 trillion economy and only 20 billion of that is cash, then you see why it only covers you up to that amount. So if you got 10 million in your account and it's lost, they're going to cover you up to 100 grand. That's their fiduciary duty. That's the FDIC, the insurance on your account, right? And what is that actually? What is that actually? That's them allowing to be able to keep their reserves while everybody else starves.